Welcome to the Deep Dive.
Great to be here.
Today, we're diving into Tesla, specifically what's been going on between, let's see, June 27th and July 4th, 2025.
Yeah, quite a bit happened in that short window.
Our goal really is to cut through the noise, figure out what actually happened, and, explain what it means for you, especially if you're maybe just starting out with investing.
Exactly. We're going to pull out the key insights, help you see both the exciting stuff and the risks involved with Tesla.
Give folks some clarity.
That's the idea. Informed decisions.
Okay, so let's unpack this. Let's start with the positives. What's giving Tesla some positive momentum right now? I know there was a lot of buzz around the robotaxi news initially.
Yeah, that definitely caused a stir. But what's maybe more interesting underneath is how Tesla's shoring up its strategy.
How so?
Well, first they made a pretty significant hire. Henry Kwong. He used to head up autonomy at GM Cruise.
Oh, wow. From a competitor.
Right, he's their new AI director.
Yeah.
That's a serious move, bringing in someone with that kind of direct experience. It really bolsters their AV credentials.
Yeah, signals they're doubling down on autonomy. Okay, that's a big strategic piece. What else? Any good news from key markets? China, maybe? That's been tricky for them.
Absolutely. That was the other piece of good news. June deliveries in China, they actually went up.
By how much?
Not a huge amount, 0.8% compared to last year, about 71,600 vehicles.
Okay, 0.8% sounds tiny. Why is that significant?
Because it breaks an 8-month slump there. Sales had been falling month after month. So seeing any kind of stabilization, even small, in such a critical market, that's a big relief.
Right, stops the bleeding, so to speak, shows maybe they're finding their footing against local competition.
Potentially, yeah. It's less about massive growth right now and more about resilience.
Got it. Okay, so that brings us to the other side of the coin. The valuation, the risks. That robotaxi excitement sounds good, but what challenges popped up?
Well, those Austin trials, while exciting, they definitely highlighted the hurdles. Execution risk, regulatory risk.
What happened?
Videos started popping up showing, well, mixed performance.
Mixed how? Like glitches?
Yeah, exactly. Driving errors, going into the wrong lane, some reports of sudden unexpected braking.
Ooh, not great.
No. And that immediately got the attention of the NHTSA.
The safety regulators.
Right. And on top of that, you even have some Texas state legislators now saying, hey, maybe let's pause this until September. That's when a new state law on autonomous vehicles kicks in.
Okay. So the path to fully autonomous driving still got some bumps.
Definitely more of a marathon, not a sprint.
So how did all this, the glitches and the regulatory attention affect the stock? Did that initial robotaxi buzz hold?
It did initially. The stock jumped like 8 or 9% on the robotaxi news.
Oh, but
by the end of the week, it had actually dipped about 7%.
Wow, quite a swing. Why the drop then, if not just the robotaxi issues?
It seems like those ongoing worries resurfaced. Concerns about sales in Europe or even China, despite that small uptick.
Okay.
And there was also mention of Musk-Trump tensions factoring in.
Right. Political friction, adding another layer of uncertainty for investors.
Yeah.
Potential regulatory stuff down the line.
Exactly. It just adds to the volatility picture. Yeah. So big picture. The stock's down quite a bit year to date, about 19%, I think. And June itself closed down almost 2% after these delivery numbers and regulatory headlines.
And this is happening while global car sales generally aren't looking too strong either.
Correct. Which just makes Tesla's growth path that much harder, even with their internal efforts.
Okay, so wrapping this up, what's the takeaway for someone listening, maybe trying to make sense of all this for their own investments?
I think the main point is Tesla's still very much a high volatility stock. High potential reward, yes, but also high risk.
So caution is key.
Absolutely, especially if you're newer to investing. Careful risk management is crucial. Things like, thinking about when you buy timed entry and maybe using protective stops.
Stops to limit potential losses if the price drops sharply.
Exactly. Tools to help manage those wild swings we saw just in this 1 week.
It does raise that question, doesn't it? For someone investing for the long haul, maybe that focus on AI and autonomy, plus hope for China, maybe that still makes sense. Perhaps buying on dips?
That's the long-term bull case, yes. Holding or adding carefully.
But for everyone, short-term or long-term, really understanding and preparing for that volatility seems essential. Something to think about. New tech always sounds amazing, but getting there is rarely a straight line up, right?
It's always a journey. Strategy needs to reflect that.
Welcome to the Deep Dive. Today, we're taking a closer look at Tesla, specifically its stock, TSLA, and sort of the market whirlwind from July 4th up to July 13th, 2025. If you've been curious about all the buzz or maybe why this company's stock seems to make such big moves sometimes, well, this deep dive is definitely for you. Our mission here is really to cut through the noise, understand the key events, and, try to figure out what it all means as you stay informed about the market.
Yeah, and what's truly fascinating here is how you have so many different forces acting at once. You've got new tech announcements, political headlines, all pulling a major company like Tesla in, well, different directions. The current price is hovering around $313, give or take. But understanding why it shifts day to day, that's our real focus here.
Okay, so let's dive into some of the positives first. The recent positive developments for Tesla, what really stands out as a big driver lately?
Well, I think a really significant event was back on July 11th. There was that announcement that Tesla plans to expand its Austin robotaxi pilot service. Wow. Expand it into the Bay Area. And this isn't just, about putting more cars on the road. It's seen as a really strategic move.
Yeah.
Analysts see it as a huge long-term growth catalyst.
Right, a catalyst. That's a pretty significant pivot, isn't it? And analysts are certainly excited, you mentioned.
Oh, definitely. Morgan Stanley, for instance, they attribute a massive chunk, like $250 of their $410 price target for Tesla just to this self-driving tech.
Wow, $250 just for that piece.
Exactly. And Benchmark's Mickey Legg. He even raised his target pretty substantially, went from $395 up to $475, really citing this robotaxi optimism. And these price targets, just for clarity, that's basically what analysts expect the stock might reach in, say, the next year or so.
Okay, got it. So it seems the market's perhaps starting to view Tesla a bit differently.
I think so. Less as maybe just a car company and more, as potentially this high-margin AI and robotics platform.
Yeah.
Which could unlock major upside, theoretically. We also saw Cathie Wood's ARK invest. They're known for betting big on disruptive tech, right? But they added nearly $18.5 million worth of TSLA shares across two funds, ARK and ARKW, on that same day, July 11th.
That's a pretty strong vote of confidence, then, from a well-known tech investor.
It signals continued faith in that long-term future vision for Tesla, yeah.
And looking just a little bit ahead, there's also that upcoming showroom opening in Mumbai, India. That's July 15th, could be a big push into a new market.
That's right, potentially significant. But, okay, now let's maybe explore the other side of the coin, the risks, the challenges, because those have certainly impacted Tesla too, especially this past week.
Absolutely. And speaking of those external pressures, one event that really sent ripples through the market was Elon Musk launching the America Party. That was July 7th.
Yeah, that caused quite a stir.
It did. Tesla shares plunged something like 7-8% that day, wiped off roughly $80 billion in market value, just like that. Investors seem pretty concerned maybe about his focus drifting away from Tesla because of these, well, political distractions.
And that reaction makes sense. Yeah. We also saw kind of mixed market reactions around the tariff extension on July 8th. Remember, new tariffs on certain goods were postponed. Now, Tesla itself recovered a little bit that day, about 1.3%, but the broader market was kind of down. Just shows how these wider economic and political uncertainties, they still create unease.
Right. It's not just about Tesla-specific news. And beyond the headlines, the actual core business numbers, they also show some complexity, don't they?
They do. The early July Q2 delivery data came in around 384,000 deliveries. Yeah. Now, that's actually down 13% compared to last year.
Okay, down 13%. So how are people reading that?
Well, it's mixed. Some analysts look at it and say, okay, maybe demand is weakening. Others argue, well, given the tough economic conditions globally, maybe holding relatively stable isn't so bad.
Two different takes on the same number.
Exactly. And then there's the whole valuation question. Wall Street analysts, on average, they generally have a hold rating right now. The average price target is hovering around $300, which, compared to the current price, actually suggests maybe a slight downside, like 4%.
So not a strong buy signal from the consensus, then?
Not uniformly, no. While you have Goldman raising its target to $315 and Benchmark being very bullish at $475, you also have Mizuho trimming its target down to $375. And there was even one top analyst who cut their target from $315 down to $285, though they kept a hold. It just really illustrates the wide range of opinions investors are trying to navigate right now.
Okay, so wrapping this all up then, what does this complex picture actually mean for you, the listener? Tesla's clearly in the middle of some really high-impact events. You've got the exciting potential on one side, the robotaxis, the AI, global expansion.
But yeah, those positives have to be balanced against these other factors, like the leadership distractions we talked about, the softer EV delivery numbers, and a stock valuation that many would argue is already quite high, quite stretched.
So ultimately, it seems like if you're someone aiming for growth, maybe you can stomach the volatility. The sources seem to suggest holding or perhaps strategically buying on dips could be considered, especially if you really believe Tesla will deliver on that robotaxi and AI potential down the line.
Right. But conversely, if all these headlines and the big market swings make you uneasy, well, then you might want to consider if maybe reducing your exposure makes more sense for your own comfort level, at least until maybe the company's core business trends look a bit more stable.
Yeah, that makes sense. I guess the real question it leaves you, the listener, with is how much weight do you personally put on a company's sort of future potential versus its very real present-day challenges and those external distractions? Something to think about. Welcome back to the deep dive. This week, we're pulling apart a big one, Tesla.
Yep, TSLA.
If you've been watching the stock, you know it's been quite the ride, especially that week from July 18th to the 26th, 2025.
A really pivotal week.
Exactly. It's a great example of how fast things change and what really moves a stock,
Yep.
especially if you're newer to investing.
Right. And our goal today is to just cut through all that noise from that week. We've looked at the announcements, the earnings, analyst takes. We want to give you the essential insights, basically. Show you why that week mattered so much for Tesla.
Okay, let's unpack it. The headlines felt pretty negative, didn't they? A lot of, well, sobering news.
It did.
But with Tesla, analysts often look way beyond today. So what are they seeing as, like, potential positives, any signs of future growth?
That's the key question. It's fascinating because despite the current financial picture, the focus is really on the long game. Robotaxis and their whole AI push, they're actually piloting robotaxis in Austin now, and there's serious talk about San Francisco soon. It's not just talk, it's central to their autonomy strategy.
So less about car sales right now, more about that autonomous future becoming real.
Precisely. Analysts keep saying for Tesla's next big growth phase, they need to show robotaxis will move the dial. It means proving this tech can be a real profitable business. That's what justifies, the huge valuation. It's valued more like a tech or AI company, not just cars.
Right. The valuation is based on that future potential.
Exactly. But it really hinges on seeing actual results, measurable progress soon. The market wants proof.
Okay, that makes sense. Future hopes versus current reality. So let's talk about that current reality. The Q2 numbers weren't great, were they?
No, definitely not. We saw Tesla report its worst quarterly sales drop in, well, over a decade. Revenue was down about 12% year over year, $22.4 billion. That missed expectations, signaled a tightening market. Maybe the price cuts didn't fully work as hoped.
And earnings per share? Any better there?
Unfortunately, no. Adjusted EPS also missed, came in at 40 cents versus the $1.42 expected. And then CEO Elon Musk himself warned investors, basically said, expect a few rough quarters ahead. It's pretty direct.
Wow. Why the caution?
Well, things like EV tax credits expiring, plus, way more competition from legacy automakers and Chinese EV makers. The stock reacted badly, dropped about 8%, closed near $305. One of its worst days in 2025, really.
Okay, so a stark contrast there. Future promise, current pain. How are analysts valuing the stock now? Are they still bullish or getting cautious?
They're really divided. It perfectly mirrors the situation. You've got bears like UBS calling it fundamentally overvalued with, I think, $215 target. JP Morgan's even lower, $115.
That's significant downside.
Yeah, they're looking at current fundamentals, production, margins.
But there are bulls, too.
Oh, yeah. On the other side, you have Wedbush with a $500 target. They're betting big on the robotaxi, AI, the whole tech transformation story. When you average it all out, the consensus target is around $300, which interestingly implies maybe 8% downside from where it was trading. So the average view is kind of neutral to slightly cautious.
That's a huge range. Are there other risks playing into this beyond just the numbers, things may be harder to quantify?
Absolutely. Brand risk is a big one now. Investor sentiment, too. You had Ross Gerber, a longtime Tesla bull, call the earnings sad and depressing. He pointed to concerns over Musk's political comments and actions potentially hurting the brand.
Right, the idea that the CEO's actions could actually impact sales.
Exactly. If people choose not to buy because of the CEO, that's real lost revenue. Plus, you have other worries like tariffs, general distractions. It all weighs on confidence and demand.
So summing this all up, the promises, the bad numbers, the divided analysts, the brand risks, what's the bottom line for someone trying to make sense of this for investing?
Well, the key takeaway is this duality. Tesla just posted its worst sales drop in ages with a cautious outlook from the top. That's serious. But analysts are split. Some see major risk based on today's reality. Others see huge potential if the future tech like robotaxis and AI cans out.
And this is where it gets really interesting for you, the listener.
Yeah, this whole situation really highlights how volatile individual stocks can be, especially high-growth tech names. Tesla could be huge, but the path is clearly rocky. So the question for you is, are you comfortable with these big swings, holding through rough patches? Or maybe diversifying, spreading your risk across other tech stocks or even index funds makes more sense while Tesla works through these challenges.
It really makes you think about that balance between present performance and future bets, something to keep considering. Until next time, keep digging.